Here the value of depreciation goes on decreasing because the original cost of the asset also goes on decreasing year after year under written down value method. What is the entry for purchasing of machine? Your entry will be machinery account data or machine account data to bank account. If it is loss, we'll record in the credit side of machinery account. If it is profit, we have to record in the debit side of machinery account. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today we are in the 8th session, that is last session of the chapter, that is chapter 7 from part B of first PUC Accountancy syllabus, that is depreciation, provisions and reserves. So my dear students, let us quickly recall what we have discussed in a previous session. So in a previous session, I was discussing about a problem on written down value method. So we had solved an important problem, that is 12 marks problem on written down value method. So hope you know how we have solved the problem. So here the value of depreciation goes on decreasing because the original cost of the asset also goes on decreasing year after year under written down value method. In today's session also, I had told you we are going to continue with one more problem on calculation of depreciation under written down value method. Now go through the problem here. So here there is not only one asset, but there is more than one asset. So let us see how we have to solve the problem under written down value method when there is more than one asset. So on 1/4/2013, Tata Company Limited purchased a machinery A. So since there is more than one machine, so we have named it as machinery A and machinery B. Like that we have named the machinery. So on 1/4/2013, Tata Company Limited purchased a machinery A. So they have purchased one machine which is named as machinery A, costing rupees 1 lakh. And on 30th/9/2015, the machinery A was sold. So what they have done? They have sold that old machinery A. On the same day, a new machinery B was purchased for rupees 50,000. Again, after selling the old machinery, that is machinery A, they have purchased one more machine, that is machinery B, for rupees 50,000. The firm charges depreciation at 10% per annum. So what is the percentage of depreciation? That is 10% under diminishing balance method. So they are going to charge the depreciation under diminishing balance method. Accounts are closed on 31st March every year. So they have clearly told the accounts has to be closed on 31st March every year. Prepare machinery account and depreciation account for the first 4 years. So they have clearly asked us to prepare machinery account and depreciation account for first 4 years. Now this is a problem. Hope you are clear with the problem. So once again we shall recall. So they have purchased a machinery A on or for rupees 1 lakh, and on 30th/9/2015 they have sold that machinery. They have sold that old machinery for rupees 80,000. And on the same day, they have purchased one more machine, that is machinery B, worth rupees 50,000. And they have clearly told depreciation has to be charged at 10% per annum under diminishing balance method. And we have to prepare accounts, that is machinery account and depreciation account for first 4 years. So once you see the problem, please write the date so that it will be easy for you to prepare the ledger accounts. Now, when did they purchase a machine? 1/4/2013. They have purchased a machine, that is machinery A, worth rupees how much? Worth rupees 1 lakh. Okay. Next, 30th/9/2015. On 30th/9/2015, they have sold this machine A. They have sold machine A worth rupees 80,000. So they have sold for rupees 80,000. Next, on the same day, that is on 30th/9 itself, they have purchased one more machine, that is machine B, for rupees how much? 50,000. So they have purchased for rupees 50,000. The firm charges depreciation at 10%. Now, first we shall see the dates for first 4 years. So they have purchased on 1/4/2013. Then what is the year ending? 31st-3-2014. So this is the first year. Second year 1/4/2014 to 31st-3-2015. So this is the second year. Next 1/4/2015 to 31st-3-2016. Next 1/4/2016 to 31st-3-2017. So these are the 4 years where we have to prepare accounts, that is machinery account and depreciation account. Now in the first year 1/4/2013, so only one machine was there, so there is no problem. There was only one machine, that is machine A. Okay. Next in the second year also till 31st March 2015 nothing had happened. So this machine there was only one machine, that is machine A. Now in the third year what happens? 30th-9/2015, which falls under third year, that is third financial year, they have sold the machine and they have purchased one more machine. So here we have to be very careful because one they have sold, in the same way machinery B was purchased. That is on 30th-9/2015 also they have purchased one more new machine, that is machine B. Third year, you have to be very careful while preparing the ledger accounts. Hope you are clear with the problem. Now we shall directly go through the solution. So this I'll come later, that is profit or loss on sale of machine A, because machine A was sold on third financial year. So while recording the ledger accounts in the third year, we shall come to this, that is profit or loss on sale of machine A. Now till then we shall record this machinery account for first 2 years. So first, when did they purchase the machine? Now what is the entry for purchasing of machine? Your entry will be machinery account data or machine account data to bank account. So when did they purchase? So see the date. So they have purchased on 1/4/2013. So how to record? 1/4/2013 to bank account. So what is the value? 85,000 plus 15,000, that is 1 lakh. So 1/4/2015 to bank account, that is of machine A, that is 1 lakh. So this is for purchase of machine. Now in the first year nothing has happened, so we have to directly calculate the depreciation, that is 31st-3/2014, end of first year. So end of first year how much? It is 31st-3/2014. So for the whole year the machine was there in the business, so we have to calculate the depreciation. So by depreciation account, 1 lakh is the original cost of the machine into 10%. 10% is a percentage of depreciation, so I'll get 10,000. Okay. Now balance both the side, because in the first year only one machine was there and it was there for whole year. So debit side it is 1 lakh minus 10,000, so I'll get 90,000 as a balancing figure. So what you are going to do with that? You have to carry down that balance. 31st-3/2014 by balance carried down 90,000. Okay. So this is about first year. Now coming to the second year, 1/4/2014 to balance brought down. So the amount what you have carried down here, that is 90,000, bring down that balance. To balance brought down 90,000. Now in the second year also I have told you nothing to worry, because the first machine was there for the whole year. Nothing had happened. They have not sold. In the same way, they have not purchased in between. So that old machine, that is machine A, was there for the whole year. So 31st-3/2015 by depreciation account, but here you are going to calculate on the reduced value, that is 90,000. 90,000 into 10%, so I'll get how much? 9,000. Now balance both the side, balancing figure has to be carried down for the next year. In the debit side it is 90,000. Credit side also it is 90,000. 90,000 minus 9,000 will get a balancing figure of 81,000. So that is 31st-3/2015 by balance carried down 81,000. Hope you are clear with these 2 years. Now coming to the third year. So in third year we have to be very careful, because old machine was sold, on the same day a new machine was being purchased. Now 1/4/2015, first bring down the balance. To balance brought down, that is of machine A. So what is the balance? 81,000. So 81,000. Next, what happens? Now see the date here. Next 30th/9/2015, they sold the machine for rupees 80,000. So before selling the machine, till the date when the machine was there in that particular financial year, we have to charge the depreciation. Correct? So for how many months we have to charge the depreciation? That is from 1/4/2000. What is the third financial year? 15. 1/4/2015 to 30th/9/2015. So for these many months it was there in the business in that particular financial year. So till then we have to charge the depreciation. So first April, May, June, July, August, September. So for 6 months it was there in the business. So 6 divided by 12. So we have to calculate that. So 30th/9/2015 on the date of selling the asset. So by depreciation account 81,000. Current value was 81,000 into 10% is the value of depreciation, and it was there only for 6 months in that particular financial year. So into 6 by 12, so we'll get 4,050. So this is for charging depreciation. After charging depreciation, we have to record entry for selling of asset. So what is the entry? So your entry will be bank account data to asset account. So here in this problem, it is bank account data to machinery account. On the same day, that is on the date of selling of asset, 30th/9/2015 by bank account. Now what is the selling price? Now see the problem. So on what price it was sold? It was sold for rupees 80,000. So how much? It is 80,000. Now we have to see whether that machine A was sold on profit or loss. So in between they have sold the machine. For 2 years it was there for the whole year, and in the third year they have sold the machine. Now we have to see whether it is being sold for profit or loss. Now how to check this? Cost of machine A. Now what is the original cost of the machine? That is rupees 1 lakh. Clear? So here they have given it is 1 lakh. Next, less total depreciation. Now in the first year, what was the depreciation? In the first year, depreciation was 10,000, second year 9,000, third year 4,050. So till when the machine was there, we have to deduct all years depreciation. So in the first year, it was 10,000, second year 9,000, third year 4,050. So add everything, so I'll get 23,000. So 1 lakh minus 23,000. 1 lakh is the original cost minus all year depreciation, that is 23,000. So I'll get 76,950. The actual value of that machine after deducting the depreciation is how much? 76,950. But what was the selling price? Selling price was rupees 80,000. Here they have given. So they have sold for rupees 80,000. Correct? So selling price was rupees 80,000. It means what? The actual value was 76,950, but they have sold for 80,000. It means what? Profit. So therefore, profit on sale of machine is how much? 3,050. So we have to record that profit. So where do we record that profit? If it is loss, we'll record in the credit side of machinery account. If it is profit, we have to record in the debit side of machinery account. Now see the problem here. 30th/9/2015, that is on the date of selling of machine, to profit on sale of machine A is 3,050. Hope you are clear with this. So what you have to do, first bring down the balance of the machine, charge the depreciation till when the machine was there in the business. Next, record the entry for selling of machine. Next, record the entry for profit or loss on sale of machine. Now we are done with machine A. But on the same day, they have purchased one more machine, that is machine B. Correct? So see the problem here. The same day they have purchased machine B for rupees 50,000. So we have to record entry for that also. So how to record? So 30th/9/2015 to bank account cost of machine B. How much it is? 50,000. That is purchase of new machine. Now this machine was purchased on 30th/9/2015. Correct? So what is the end of the financial year? 30th/9/2015 it was purchased, whereas end of the financial year is 31st March 2016. So for how many months the machine was there in that particular financial year? That is 9. 10, 11, 12, 1, 2, 3, 6 months. Correct? So it was there for 6 months. So till then we have to calculate the depreciation. That is end of the financial year 31st March 2016 by depreciation account. What is the value of second machine? Now we are not going to consider the machine A because we are done with that. We have sold the machine. We have taken out the profit also. Now consider the machine B. So the value of machine B is 50,000. 10% is a depreciation, but that machine was not there for the whole year because it was purchased in between. So it was there only for 6 months. So 6 divided by 12, that is 2,500. So we have recorded entry for purchase of machine B. At the same time, we have charged depreciation for machine B. Now balance both the side. In the debit side, the total will be 1,34,050. Whereas in the credit side, we'll get a balancing figure of 47,500. So what is this? This is balance carried down for the next year. So 31st-3/2016 by balance carried down 47,500. Hope you are clear with third year. So here one machine was sold and at the same time one machine was purchased. Now in the fourth year, two balance brought down. So what happens? Whatever the amount you have carried down here, bring down that balance. So this is a balance of machine B because machine A was sold. So this is a balance of machine B, 47,500. In the fourth year, nothing had happened. In the fourth year, the machine B was there for the whole year, correct? So we have to charge depreciation for the whole financial year. So how to record? 31st-3/2017 by depreciation account, the value of machine B is 47,500 into 10%. So I'll get 4,750. Now balance both the side. In the debit side it is 47,500. Credit side it is only 4,750. So I'll get a balancing figure of 42,750. So what you are going to do with that? So carry it down for the next year. 31st-3/2017 by balance carried down 42,750. Now how to wind up? I have already told you. If they have asked for 4 years, we have to bring down the balance in the 5th year and wind up our machinery account. So 1/4/2017, two balance brought down 42,750. So this is how we are going to solve machinery account, or we are going to prepare the machinery account. Now coming to the next one, that is depreciation account. So we know about depreciation account. First entry is for charging depreciation. So your entry will be depreciation account data to asset account. Second entry is for what? Transfer of depreciation to profit and loss account. So your entry will be profit and loss account data to depreciation account. Now, your format remains same. You will be having debit as well as credit side. Under debit side, date, particulars, journal folio and amount. Credit side also date, particulars, journal folio and amount. Now, normally depreciation is charged at the end of the financial year. Now, end of the first year, that is 31st-3/2014. So, what is your entry? Depreciation account data to machinery account. So, write to machinery account. Now, what is first year depreciation? First year depreciation is 10,000. So, record that 10,000. So, 10,000. Now, transfer this depreciation to profit and loss account. That is 31st-3/2014 by profit and loss account 10,000. So, both the side it is 10,000. Now, coming to the second year. So, let us see what is the second year depreciation. So, it is 9,000. So, how to record? 31st-3/2015 to machinery account 9,000. Same amount has to be transferred to profit and loss account. So, 31st-3/2015 by profit and loss account 9,000 both the side. Now, coming to the third year. So, what is third year depreciation? So, we have two depreciation here, 4,050 and one more depreciation of 2,500. So, we have to record both the depreciation. So, this is of machine A and this is of machine B. Now, how do you record this? So, you will record it as 31st-3/2016 to machinery A. So, machine A 4,050 and to machine B, how much? 2,500. And you have to transfer that both the amount to profit and loss account. 31st-3/2016 by profit and loss account. So, the total of both that is 4050 and 2500 is 6550. So both the side will be 6550. Now coming to the next one. In the last year, we have a depreciation of 4750. So transfer that to profit and loss account. So to machinery account, that is 31st-3-2017, to machinery account 4750, and here also 31st-3-2017 by profit and loss account 4750. So this is how you are going to calculate or you are going to prepare the depreciation account. So suppose in one particular year there are 2 depreciation, we have to take 2 depreciation amount also, and we have to total it and then transfer to profit and loss account. So this is how the problem is when there is more than one machine and one machine is being sold at the same time the other new machine is being purchased in that particular financial year. So anyhow, we have to calculate depreciation for each and every year if they purchase a machine or if they sell the machine also. And one more thing, if they sell the machine, we have to record the entry for profit or loss on sale of machine. So my dear students, hope you have understood the problem. Similar type of problem will be asked in your question paper also. That is for 12 marks either on straight line method or on written down value method. So hope you have understood the problem. See you all in my next session. Till then, take care. Thank you.